Welcome to the Innovative Accountant Podcast, presented by Integrated Advisory. Join your host, CPA Tim Coquell, as he explores thought-provoking ideas, information, and best practices from leading experts focused on supporting the accounting profession and the integrated advisory community. Here's your host, Tim Coquell.
Welcome back to the Innovative Accountant Podcast. I'm your host, Tim Coquell, and we have an exciting guest joining us today from Montreal, Quebec, Joe Galli. Welcome to the podcast, Joe.
Thanks, Tim. Really excited to be here, and this is my first podcast, so I'll see. Hopefully I don't screw it up too badly.
No, it's going to go perfectly, and you're going to be a natural at this, Joe. After speaking to you and meeting you a few weeks back, I'm super excited about our conversation today, and really just sharing your inspiring story with our audience and listeners. And so, you know, I'll kind of jump into that, and then I'll get you to sort of share your background. You know, I always get inspired by people that find ways to rise up in the face of adversity and challenges in their life. And your story that we're going to share to our listeners today is going to personify that. As a father, I can't imagine how difficult it would have been for you back in 2009 to learn that 2 of your 3 boys were diagnosed with Loeys-Dietz syndrome. I wasn't aware of this disease prior to meeting you, but after learning more about how challenging it is, I believe it's really important to educate people about it. And more importantly, the amazing things that you've done for Canada, for people that are fighting this, and for just healthcare and the medical system in general, and how you've really challenged your love, dedication, commitment to your family, and your professional experience to really make a huge difference in this area. So we're gonna learn a lot about that. We're gonna learn about the foundation that you've created, which is a national charitable organization dedicated to the promotion of research, awareness, education, and support for those affected by Loeys-Dietz syndrome and related heritable disorders. So, and then we're also going to talk a little bit about how you've tackled some of the funding challenges that charities have today. You know, and I would highly encourage. We've got a lot of accounting listeners and professional financial people, lawyers today, to stay with us through this podcast, because Joe's done some really creative things in terms of using life insurance and creating opportunities to create more funding for research for these important causes. Insurance hasn't been, you know, it's been something that you've been able to donate for many years. And lots of people are aware of that, but the challenges with that is, how do you fund it? How do you fund the future premiums? How do charities find ways to do that? And Joe has just been so creative in his approach to this that it's worth staying with us as we go through that. So I want to, you know, as we get started, just firstly, again, welcome to the podcast, Joe. Thanks for taking the time and sharing your story. Let's jump in. Let's maybe go back before, you know, I'm sure those tough days in 2009, and just talk about your background and your career. You've had an amazing career, you know, venture capital, merchant banking, M&A, like all of that stuff. So just talk with us how your career unfolded over the years.
Well, thank you very much, and thank you for having me on the show with you. This is really an honor, and I've had a chance to work with your team already, and they're great to work with and very professional. So thank you. I started off, you're welcome. I started off as a 21-year-old working for Ernst & Whinney, which is now KPMG in Canada. So guys with my color hair would remember in the accounting professional Ernst & Whinney. And I was a young kid, I was just graduating from university, and I went to work in raising financing, but through government grants. And at the time, there was a lot of money available for manufacturing, export, and R&D, federal and provincial. And so I did that for a couple of years, which was fantastic. I got a chance to work with really interesting companies, manufacturers. I was 21 years old. I didn't know anything, but I could get out and I could hustle, and that was a key ingredient. And essentially, I understood their businesses, but it was a great school, if you'd like. Ernst was a fantastic education for me. Then I went into bankruptcy and insolvency, really great education, because I learned how to read a financial statement from the right to the left, which means you start with the notes and go this way. And that was really prescient because I did a lot of work at the time. This was in the 80s, mid 80s, and a bank would call us in Wednesday, go in and decide by Friday if we're pulling the plug. So it had to be pretty quick, laser focused to figure out what's the risk, what's the value, what are the values, the inventory, all of that type of thing. So again, great education because you can't, if you mess that up, there's a lot of people's lives that are involved here, employees, suppliers, and the such. So a lot of pressure, but great education again. So I'm 23, 24 at that stage. Decided that I didn't like, and it was interesting because I had my own P&L, which I was not supposed to have. At that time, I should have been an audit student, articling, if you take their structure. And the senior partner, Pierre Robitaille, super guy, he's retired now, was running, he was the PIC partner in charge, came to see me and said, Joe, we want you to become a partner. And I said, well, how long does that take? He said, it takes 12 years to become a partner. And I said, well, I already have my own P&L, and you want me to wait 12 years to become a partner so I can get in on the profits and all the other stuff? And he looked at me and said, yeah. I said, Pierre, that doesn't work for me. I mean, I'm not going to wait 12 years. And we were I was with a group of 5 people. We were the second most profitable group in Ernst in Canada. So, I'm a smart ass. I think I like all 23, 24, 25-year-olds. I think that I know better than everybody else. And I essentially resigned and went to work on my own. And I started my own boutique, not knowing what the hell I was doing, but I started my own boutique operation doing M&A. And my first client was a buddy of mine who was a plumbing company buying another plumbing company. So I did his M&A, and that led, one thing led to another, led to another. And eventually I developed a niche working with, at the time, there was a lot of up and coming French Canadian entrepreneurs, people like Transcontinental Printing, Quebecor, people like that, big names that built really substantial businesses. And so I developed a niche in turnaround work. So I would go into Transcontinental, one of their factories, and I would reposition the whole factory from a market standpoint. So we would do market research, strategy, all of that type of stuff. And then I got into, actually, ironically, telemarketing. Transcontinental had bought a telemarketing company that was selling subscriptions to one of its newspapers, and it was in trouble. So I went in as like a director of sales to kind of get that business turned around, and we grew it from 45 to 250 seats very quickly by doing all sorts of innovative products. At the time, there was the deregulation of telecom, and ironically, AD&D insurance. So accidental death and dismemberment insurance. So I got my first taste of it 35 odd years ago. So did that, and then just more and more mandates doing a lot of turnaround work. I like to go into a company. I like to see where the problems are. I like to figure out the strategy. And I'm not a report guy. I don't write reports. I get in and I roll up my sleeves. Type A personality, ADD, ADHD, dysgraphic, all the stuff that today you would be giving, lots of drugs for. That's my personality. But it was a great school because every time you're learning something new, you're learning a new business. But there's a lot of common elements across the board. And one of the common elements was when a company's in trouble, there's only one place to look, and that's at the very top. Everything stems from there. And so I teach my kids today, I have my 3 boys, and we talk about business since they're babies around the table. Always look at the top. If there's a problem, it starts there. Philosophy, attitude, all of that. So I did that, and then got into around the year 2000, 1999, there was this little thing called a tech bubble. So for the young kids out there, you don't remember this, but valuations were done on the basis of how much cash you were burning. So the more cash you burnt, the more the valuable your company was. So that was around 91, 99, 2000. All these wealth managers that I thought were fantastic blew 35% of my money at that time. And I said, I probably can't do worse than them. And so I liquidated everything. I started to invest my own capital. Did a lot of early stage privates to publics, finding shells, cleaning them up, all of that type of stuff. Made a lot of money, lost a lot of money. I could do worse than them based on the up and down. But it was a great experience. I've invested now in over 125 private companies and or public, like small caps. And so you learn really quickly by losing money. You don't learn by making money, but you learn by losing money how to look at risk. And so that was really, I became very comfortable looking and sizing up risk. So did that, and then I went in and I had invested some of my money into a public company that was in the healthcare space. They'd raised $100 million. They were unsuccessful, so I went in, raised $12.5 million in 2007 on a non-brokered private placement, and the condition was that I step in as CEO. I was already on the board. So I stepped in as CEO, and there was a little storm at that time around 08, 09. People may not remember, but the financial system was collapsing, and we were
Right.
basically hedge fund backed. So I actually built a factory in Florida for plasma fragmentation, really innovative. But at the end of the day, I had to liquidate that, and that kind of times with when. At that time, I have three boys, Alexander, Thomas, and Noah. And at the time, Alexander was 15, 13, and 11. And it was at the time where we discovered that Alexander had this rare genetic disease. And we found it by accident. And I highly, anybody who has a kid and you've seen your kid grow up, you're always looking at their body and how it is. And we have a swimming pool. And the reason I'm saying that is you see their kids with just a bathing suit. So you don't see, you see their whole body basically. If there's something changing, you see it. And
Right.
since Alexander was 10 years old, he had something called a pectus. So male or female doesn't matter. These are the pecs on the body, and this is the sternum. Okay. And he had a very slight indentation. And every year we would go see the pediatrician, and the pediatrician would say, look, 2% of the population has it, nothing to worry about. So you go next year, do the same exercise. And between September, so he's 15 years old, this is September 09, between September, Labor Day, when we closed the pool, and mid-November, when I see him coming out of the shower one day, very shy kid, so always dressed up. But in this case, he had no top on. And his pectus, this piece here in the sternum that you see,
Yeah.
essentially had gone from being this deep to big enough to put my fist into.
Wow.
Yeah, so yeah, even today, it chokes me up.
Yeah.
But you see your child, you see a whole change in their morphology, how their body is. So and his ribs had flexed. So at the time, I'd said to his mother, I said, "Hey, have you seen Alex's body?" And she said, "Well, what do you mean?" I said, "Well, come and check." So we took a look and we looked at his back, and we had friends that had a child that had scoliosis. Scoliosis is a curvature of the spine. And so we were always looking when they were in their bathing suit is that, just because your friend has it, you say, well, maybe my kid has it. And they were always checking their backs. And the way you do that as a parent is you ask your child to lean forward and you just see if there's the spinal column straight or if there's any sort of deviation. You can all do that at home anytime. So his spine had gone from 0 to 32 degrees in 10 weeks of curvature.
Wow.
So
That's scary.
the chest had changed, the back had changed, and as a parent, and for anybody that's a parent, you never want to freak your kid out, right? Because they're going to look to you and see if you're freaked out, then they should be freaked out, right? So first thing is to try and stay calm about it. And we go to see the pediatrician, and she says, "Yeah, this is serious." So I said, "Well, what are the next steps?" And she says, "Well, I don't know. Maybe we'll get a cardiologist." And at that point, my confidence level is going down with this pediatrician. And I would make a comment, and I'll make this comment a number of times in this conversation, in this podcast, for any parent that has a child to be an advocate or for a family member, never be afraid to fire a doctor. Okay. I know this goes completely against what everybody thinks, but they're there to supply a service and a professional level of service. And if you don't think you're getting it, don't be afraid to fire them. Anyways, this doctor basically dragged her feet. We couldn't get any access to care for him. And so I used to belong to YPO, Young Presidents, Young Entrepreneurs. And they had a program that I subscribed to, which is called the Health Foundation Network in Cincinnati, which gives you access to U.S. healthcare. So you pay $500 a year, like a membership, and then if you ever need it, they organize it. And so at this point, my concern is his delta rate of change of his body in 10 weeks, the curve was this steep. So as a parent, you're saying, my God, what happens if it continues in the next 10 weeks and on that same trajectory, he'll be at 50, 60% curvature. And if you can just understand the morphology of the body, your heart and your lungs are just mechanical items. But they need space, which is what your chest and your ribs provide, is a frame. If you start to contort that or the back, you now put pressure on the lungs and on the heart, where eventually you impede their ability to function. Okay.
Right.
So I'm thinking, how far is this going to go? How fast? And is he going to be able to breathe? Will his heart function properly? So we were fortunate enough to have the wherewithal to go to the Cleveland Clinic. Absolutely phenomenal institution in Cleveland. We saw 9 specialists in 3 days. And I remember Dr. Moran, the geneticist, she's pregnant out to here, wonderful lady. She says, I think it's this thing, it's like Marfan or this other one that we've kind of just recently found out about called Loeys-Dietz. And she said, do you want me to test them sequentially? And I said, no, you got my credit card. Go test everything. And at 4 o'clock, Christmas Eve, 2009, I get a phone call from her saying, and she's home. I can hear the kids in the background. Her husband's screaming, "Hey, honey, come back to the table. We've got it." But she was really dedicated, and she had just gotten the results. She said, "It's this other one called Loeys-Dietz, the disease that we built this foundation around." And it was like a house falling on my head because I'd already started to do research on these things, and life expectancy at that point was 27 years old.
Wow. That's scary
So,
stuff.
yeah, like just, no parent wants to have to go through that. So
No.
I made a decision at that point that my 35 years of experience, I retired that day. I was lucky enough to have the wherewithal. I was able to retire, was on a whole bunch of boards. I resigned from everything. And I said, my only mission is to keep him at that time. I didn't know about Thomas, but to keep him alive and as healthy as possible. So they do blood tests on the parents. After that came back that their mother had the gene as well, which then explained why she had many health issues over the years. And then we tested the siblings, and my second guy, Thomas, had it as well. So we're now going back and forth to Cleveland every 2 weeks. So you have a 15-year-old and a 13-year-old. You're taking out of school for 1 week at a time, flying back and forth. Not a model that you can't raise your kids that way.
Tough to sustain that, yeah.
It's tough to sustain, and anybody that has teenagers know that no teenager wants to be different. Nobody wants to be excluded from activities because now we can't have them in physical activities. They can't do gym. They can't do a whole bunch of things. So at this point, I said, you know what, we got to start a foundation. And how do foundations start very often? It's a couple of parents around a table. They get together and they start. And I take my hats off because there had been a couple of years earlier a U.S. foundation that started, Loeys-Dietz Foundation in Baltimore, and they're absolutely fantastic. All volunteers, same as we were. But I said, there's nothing in Canada. There's no expertise in Canada.
So when did they discover Loeys-Dietz? Like how long has
2005.
that been around? Because when I first started talking to you, it's probably no different than you learning about it in a very difficult way. But yeah, how long has it been identified? How did they figure it out? Just walk me through a little bit of that.
Yeah, so there's another disease called Marfan syndrome. So you'll see sometimes some basketball players that are going into the NBA or college ball, and they go for a medical, and then they're sidelined because they're very tall, sometimes 6-7 feet tall. They have these huge arm spans or wingspans. They can do all sorts of funky things in terms of moving. They're double, triple jointed. So Marfan has been around for 30 years and well categorized. Unfortunately, so Dr. Dietz and Bart Loeys out of Baltimore at Hopkins were really some of the preeminent Marfan guys. And they said, we're seeing all these other cases that the gene is not clicking when we do the test, but it looks like something else, but it kind of has similarities to it. And so they started to test other genes, and they located 2 at that time, which is in 2005-ish, 6, 7, around then. And they then said, hey, this is another disease. And actually, they named it after the 2 doctors, Dr. Loeys and Dr. Dietz. Okay. So that's why it's called Loeys-Dietz. Today, there's 6 genes. So as we've been doing more research, we realize it's far more prevalent than we thought. And it's more aggressive in many regards than Marfan. So the problem that we had at the time, Tim, was that doctors would say, this is kind of like Marfan, so let's treat it like Marfan. But because it was more aggressive, most of our patients were dying. So life expectancy was 27 because they didn't understand the aggressivity of the disease. And I'll just take a second to explain what happens is the aorta, which is the largest artery to the heart, separates. It dissects, and you would die at that point. And then you develop aneurysms anywhere in the arterial tree, from the head right down to your hips. So an aneurysm, like anybody else could get an aneurysm, but in this case, you essentially bleed to death when that happens. And then because it's collagen-based, and for the guys on the call, when I'm doing presentations, I always ask the women in the session to talk about collagen because the guys don't know what that is. But collagen is traditionally, people think about it for beauty and other stuff. But collagen is actually the glue that holds together every cell at a cellular matrix level. So think of it as the glue in your body that holds together every cell. And so the challenge that you have is that every system in your body is affected and differently. So your head, your eyes, your chest, your back, your digestive system, your allergy system, 30 to 50% mortality for a woman that has a vaginal delivery, inflammation of the joints, and I can go on and on and on and on. So unfortunately, it's what we call a multi-systemic disease. Okay. So, and the challenge that you have in the healthcare system, like in business, manufacturing doesn't talk to, marketing, it doesn't talk to finance, it doesn't talk to who it doesn't talk to. Well, cardiology doesn't talk to ophthalmology, who doesn't talk to genetics, who doesn't talk to who it doesn't talk to. And so the medical system, they're trained to be very narrow and very deep, right? That's what you want. You don't want a cardiologist to know everything about everything. You want them to understand everything about your heart when you go see a cardiologist. So right off the bat, when you have a multi-systemic disease like ours or many others, the healthcare system doesn't know how to treat it. And there's no communication this way horizontally. Consequently, think of it this way, Tim, you're a cardiologist, you're doing your testing, you're digging, doing testing, and then orthopedist is doing his stuff, and an ophthalmologist is doing their stuff, and the GI's person. And they're actually causing problems this way. Like we've had patients, by the time they're 15, have had 25 surgeries. And we've had patients die from too many surgeries, to give you an idea.
Yeah.
So
that's interesting, Joe. The integrated piece, we talk a lot about integrated advisory in our world in the finance sense. And it's just interesting to hear the medical side being exactly the same, because when we look at accountants and lawyers and investment guys and financial planners, and none of them are talking really collaboratively and using a lot of teamwork, right? And so that industry needs to change, and it sounds very much like what you're experiencing and seeing on the medical side, that there's a lot of specialists, and each of them are taking them through their own process, but there's not enough holistic sort of approaches being taken. And It sounds like you're working towards solving some of that.
We're trying to. I mean, when we first met, I was really, and you guys were explaining your business model. I was really impressed because I said, "Hey, that's our business model."
Yeah, it's the same thing.
Same thing. And you're going to hear me use the term business model and business practices in a philanthropy environment. And people look at me and say, "Well, this is a charity." And I said, "Yeah, well, if people treated it more like a business, we'd see a lot better decision making, a lot better use of funds, and a lot better investments." So I sometimes piss people off because I do refer to it from a business perspective and say, we talk about ROI, we talk about things like that, and we measure some of our KPIs, our key performance indicators are a little different sometimes, but we do have discussions around return on investment. If we're making an investment here, what's the return on investment? Yes, it feels good, but talk to me tangibly, what's the benefit here? So is that, in terms of background on the disease, that's kind of where?
Yeah, no, that helps for sure. I was just trying to get a sense of it. Obviously some big challenges in terms of people that are facing that. And prior to, your son's being diagnosed, it doesn't sound like there was a lot of funding and research, like other than what I think you'd mentioned it was Baltimore, right? So
Yep.
So obviously, as a parent, that's scary. You're learning about something new. There's not a lot of research. It's a new thing. There's not a lot of money going towards it. So that's got to be a really tough place to be in. You putting everything on hold and sort of going, okay, I'm gonna figure this out, is inspiring and commendable. And so let's talk a little bit about what you did next. So you set up a foundation. When did you set that up? What was kind of the purpose of it? How did you kind of get it going and off the ground?
Yeah, so October 20, so this is '09. We spent a good chunk of the year trying to figure out what to do to stabilize the kids and get care. October 10, we met with, so two other families, Topper family out of Toronto and the Fertino family out of Montreal. And we met at Saint Francois Fertino's house at their dining room table, like you read about and hear about, and said, "Hey, why don't we get together and do something here?" And so that was October 2010 when we decided to. We then hired legal counsel, and we had them, essentially fill in all the paperwork and help us to figure out the structure from a registration standpoint, because we wanted to do everything super clean by the book. So how do you get CRA, Canada Revenue Agency registration? How do you set that up? What's the best practices? All of that. So we started to do that. And then the other thing I did is I said, that we talk about the Pareto principle in business. I said, what's the Pareto principle in this disease? Meaning, who are the 20% of the doctors that are seeing 80% of the patients but don't know they're seeing them? And that was the question that I asked. And it became very clear to me it was cardiologists, geneticists, and orthopedic surgeons. So primarily surgeons that are seeing spine-related issues in children. And so I don't know better. I research it. I find the conferences for these guys. So the Pediatric Orthopedic Surgeons of North America, the Canadian Cardiac Society. And I called them up and I said, I'd like to have a booth at your trade show. They have the annual conference and they have a trade show portion. And so if you're at the cardiac conference, there's somebody selling stents for surgical and somebody selling defibrillators and surgical items. And I have a little booth with a little poster saying, hi, I'm selling Loeys-Dietz syndrome. And you'd be walking by and I go, Dr. Tim, do you know Marfan syndrome? And they go, yes, I do. I said, well, come on in. I want to talk to you about the evil cousin. It's much more aggressive. Mm-hmm. And really, what I wanted to do was I wanted to capture their email address. Because I said, if I can get them to give me their email address, then I can start to market to them. Okay. Right. And so I did 17 trade shows like that. And it allowed me to identify champions. So these are surgeons and key doctors and researchers that were not, remember in the pecking order, you have surgeons, you have God, and you have doctors. Okay, that's how the medical world goes. And every time I talk about this, my doctor friends go, yep, that's true. But it's a pecking order, right? There's a very clearly delineated pecking order. So, I have zero science background. I failed whatever science courses I took in high school. I have no medical understanding, but I understood to dig in enough to be able to talk to these people at their level, at their language. And we went with Hopkins and we built a diagnostic algorithm because there didn't exist one. And then we also built a medical presentation. And so I went and I did 1,200 medical presentations in Canada, the United States, and Europe, educating these people. And I did stuff that typically they don't let lay people do like me, is I did grand rounds. I would actually go Philadelphia, Boston, Montreal, and I would go and present to doctors at lunchtime. They usually have a doctor that they invite in. They bring their brown bag lunch, and you have like a discussion and lunch and learn type of thing. So I did a bunch of those. But coming back to the trade shows, one of the things that was really fascinating is I quickly delineated there are two types of surgeons and doctors. We won't talk about gods, okay? And one is there are champions, and then there's shitheads. So I apologize for the language, okay? But it became really clear the ones that said, well, I don't need to know about this, or I know all about this. They knew nothing, at all. And so I would say to them, look, I'm just trying to differentiate. I'm looking for champions. And they said, well, what happens if you're not a champion? And then you're a shithead. And they would laugh. And they go, I know some of those guys. Those are some of my colleagues. But it allowed me to recruit and identify some absolutely phenomenal human beings that became really big champions for us globally, and really made it personal for them. And I said to them, tell me what you need. Okay, I said, I've got 35 years of business experience at that point. Tell me what you need. You need help with something? I'm your go-to guy. I will help you with that no matter what, because I'm asking you. But I said, before I ask you, I'm offering. So that's always been the philosophy, is to offer and be ready to help before we ask somebody for help. And today, some of these surgeons have become really good friends. And they call me up and say, I've got this issue, whether it's a patient issue or even a personal business issue. And we're always ready. It's just my philosophy to give them a hand. So we did these trade shows. So I'm out selling this like life insurance or toothpaste or any other product that you would, and very quickly realized that we needed to build a network of multidisciplinary clinics. So come back to the siloed approach, and I saw it with my own family because we were acting. Just to take a step back for a second, when my children were diagnosed and their mother, we sat down at the table and had a family meeting. And I said, look, we have two ways we can do this. We put our heads in the sand, pretend it's not there, or we get out in front of it. And I said, if we get out in front of it, I need to know that you guys are ready to become spokespersons. You're ready to be people that we can say, I have this, I'm living through this. And we talked about it as a family, and I'm really proud of them. And all the kids said, and their mother said, yeah, we're it. So that's why I'm uncomfortable to share what my kids have gone through, because my kids get up and give presentations and talk about it. You're a parent. As a parent, to see your child
Yeah.
take adversity like that, that's the thing I would say. I've always had a philosophy that if there's a problem, there's an opportunity. Okay, same hand, problem, opportunity. And I looked at this and I said, this is a problem. This is a big problem. Their life expectancy is 27 and they're 15. Okay, like it as a parent, it doesn't get bigger than that. So I said, how do we turn this into an opportunity? And I said, it's going to be an opportunity for us to figure out who are the best people out there that we can work with and support. And also, how can I help to build resiliency in my children? And how can I help them to take this? And I'm going to tell you, everybody out there, it sucks. Okay. That's the technical term. This sucks. As a parent and to see your kids that way, it sucks. But if we can turn it around and use it as a positive, which is what we've tried to do, and the kids have embarked, it's very rewarding. And the other element is I lost a lot of my social circle changed, because all of a sudden, you're getting together and somebody's complaining about, well, traffic was really bad today, and they go on for 15 minutes. And I'm going and saying, like, honestly, I don't give I don't give a hoot. I'm concerned about what am I going to do with my children.
Bigger things. Yeah.
Yeah. So at that point, it allowed me to focus on priorities. Okay, what's important in life? And family for me is the most important thing. So I said, how do we focus on that and build on that? So it's, I tell people, yes, it sucks, but it's also allowed me to meet some of the brightest people, some of the nicest people, some of the deepest relationships, because they're not relationships around fluff. They're relationships around substance. And when I go out west, one of my old partners who used to be from Calgary said, there's hat and cattle. And, I'm a guy from the East. I don't understand what is hat and cattle. And he says, Joe, he says, it's real simple. If the guy, a real guy's got cattle, the guy was just a hat and is all show. And I understood. And I said, that was really it. And so for us, it's allowed us to differentiate very quickly hat and cattle, the people that are all show and no substance. So it's then just to continue, we started to build multidisciplinary clinics. The first one we did was at Montreal Heart Institute, Dr. El-Hamamzi, Dr. Mongeon. They bought our philosophy around a multidisciplinary clinic. The healthcare system was not geared to that at all. We had tremendous pushback from the system just because it's a siloed system. They don't, and even billing codes, like even the fundamental structural issues were a problem. So we had to tackle those. We worked with Montreal Children's Hospital.
Sorry to interrupt you, Joe.
Yeah, go.
So the building of the clinics. So when you say we started to build these clinics, who was building the clinics? Was it you in partnership with these doctors, these champions? Where did the capital come to kind of get that going? How did the foundation fit in a bit to that? Maybe just help clarify a little bit of what you mean by the clinics.
Yeah, so it was a partnership for sure between us and the doctors. Maybe just as a point, my brother is my business partner. We own a mortgage company, similar to what you would have a mortgage investment corporation. They don't exist in Quebec, but
is that
same concept?
PENTOR?
Yeah, PENTOR Finance. So that's
we'll get to that for sure.
And my brother has been absolutely fantastic as business partners to allow me to use that platform and finances and staff to build the foundation. So we have financed everything out of our pocket for the first 10 years from scratch. So I'm very fortunate to have that ability to do that. So when we approached these doctors, we said, how do we build this? And it wasn't really capital requirement. It was resource requirement. How do you get space? How do you get nurses? How do you get imaging? How do you get genetic testing? All of these things that we don't think about, but are, they're all budget constrained. And this is an environment where the first thing everybody says is no, can't be done. Right. So the exercise I did with them is I said, I'm going to give you a blank check. Tell me what it looks like. And they said, oh, okay. So first of all, you take off the constraints and get them to focus on the big, hairy, audacious goal. And that was, how do we build these clinics? So, and I will be honest with you, we abused the system at the beginning. We did things to work around the system. We hacked the system. I don't mean computer hacking, but just hacked it from an operational standpoint. And it was a story that comes to mind. Every 2 weeks, I would have a meeting with these surgeons. Like, these are top level surgeons. Wednesday morning, 7:30 meeting, and I bring donuts and coffee. And I said, okay. And I built a the way you used to have, you have Microsoft operating system or Apple. I built an operating system for a clinic. I said, here's the way a clinic should operate. So we went through it, all of that. And I said to them one day, I said, the day that people are going to argue about where this clinic should be in the organizational structure is the day that, you've arrived. So one day I get to a meeting and there's 3 department heads in the meeting and they're arguing about this because now we've been doing stuff. We're rogue. We're not, legit. And the argument was around where this clinic should be reporting into in the organizational structure. So these 3 department heads leave. My guys who are around the table are now kind of shaking a little bit because they've had their cages rattled by the powers that be. They've been bad boys and girls. They've done stuff that they're not supposed to do. And I looked at them and I said, congratulations. And they said, what are you, crazy? I said, no. I said, remember I told you when they're going to fight organizationally where this should be positioned, tells you you've arrived. And they said, oh yeah, I get that. So it was that was the first clinic that we started to work and build, and then we did the same thing. We worked with Dr. Horn in Halifax at IWK. She'd already started building a concept, and we worked with her on that. And we have then we had a very interesting situation where I had a patient that a beautiful young lady from Trenton, Ontario, so between Kingston and Toronto. And she wrote an email to Dr. Dietz and said, this is my situation, and my cardiologist is saying that I should come back in a year. And Dr. Dietz is absolutely fantastic. We're talking about a world-class guy. He answers every email himself, okay, from every patient. So he writes back and he says, I'm not going to use the patient's name, but I'm going to just call her Barb. Barb, you have 6 months left to live, okay? But call Joe. He's in Canada. So he copies me on the email. So I get a phone call 3 minutes later from her and her mother. And we had built this algorithm to diagnose. So we walked through and I said, look, I'm not a doctor, but this is not good. I said, give me a half an hour. Let me make some calls. And at the time we didn't have resources in Toronto. And so that would have been her catchment area to go for treatment. So I called Dr. Helmamzi in Montreal and I said, I need you in Toronto. Who's the you in Toronto that's the top surgeon that can? He says, well, that's my good buddy, Mark Peterson. He's at St. Mike's in Toronto. So he puts me on the phone with Mark. It's now 9 o'clock at night and explain what's going on. He said, yeah, I'm all aware of what that clinic you built in Montreal. We love the idea. I said, I got a patient. Here's the situation. He says, have her come tomorrow at 12 o'clock. Okay. So she shows up the next day, does it. He calls me that night and says, not good. And the problem we have, if you come back to what we talked about earlier, is we often have multi-systemic issues. So in her case, that she needed surgery on the aorta, they would be able to do the surgery, but because of other complications that she had, it would kill her. Mm-hmm. So I worked with Mark for a couple of weeks and we built a whole team around her, a holistic team to take care of her other medical issues. And why that was important is Mark saw how we were able to bring in resources and essentially did surgery on her. Very interesting situation because the physiology is funky. We call it funky. It's different sometimes. And surgeons, and I didn't realize this, but surgeons do flight plans. The night before a surgery, they go through and say, we're cutting here, we're going there, we're doing this. Mm-hmm. So like a pilot, I'm taking off this way, turning this way, then going that way and the such. And they said, look, we've looked at her physiology. There's some stuff there we've never seen before. What do we do? So because we built this network, I was able to call chief surgeon at Hopkins, and I said, look, I need you for 5 minutes. It's now 9 o'clock at night, the night before their surgery. I have a cell number. And these are the relationships that we built over the years because these people saw that we were serious about creating a change in the industry. Right. So I put them in touch with each other. They talked their language. My guys called me back and said, yeah, we're good to go. And the next day they did surgery. They had complications, had to go do more surgery. But I got a beautiful photograph 30 days later from the mother with the daughter sitting on the horse. And she said the objective was to get her back on her horse within 30 days. And I was so touched by that. And I share that because, and this, kind of goes to responsibility. We're all business people around this podcast. I have no experience in healthcare whatsoever. I have no experience in science, but I have a skill set. Tim, you have a skill set. Every one of our listeners here has a skill set. And if we can find a way to leverage our skill set and enhance and help the people in the healthcare industry, we can make a difference. And they need us. Yeah. They need us.
Yeah. They need the business folks to come in and think that way. And so obviously you channeling just your approach, you talk about Pareto, you talk about all these different things, your training, getting people to think differently and, big, hairy, audacious goals. And all of that stuff is, ingrained in successful entrepreneurs and business people. And It's exciting to see what you're doing to evolve that profession, create more integration and teamwork. The clinics, your example, are obviously working. The approach makes sense. And so let's transition a little bit. So the foundation is set up, it's going, it's working. You're creating awareness, you're educating, you're creating teamwork and integration within the community, using that as a bit of a springboard. But we still have, I want to get back to a big part of this conversation today, which is the funding.
Yep.
And so if you're going to make these changes in the world, yeah, you can hack the systems, you can do some of these things, but in the end, a lot of it requires capital and money and things like that, which you've had a lot of experience in. And so in your career prior to all of this, let's talk about how PENTOR fit in, how insurance fits in, and maybe you can just, before we jump there, you can speak to kind of the state of fundraising for charities in Canada today and what the challenges they are facing to raise money to do this important research. What did you find getting into this, and how did you then start to tackle those challenges? You saw a challenge, and on the other side was an opportunity, and you've turned it into that. So let's just talk about how you evolved there.
Thank you. So the just to look at some basic stats, there's 85,000 charities in Canada registered with CRA. The typical charity model, so typical, not everybody, but the vast majority of the charity models are what I call event fundraising based. They hold a golf tournament, a gala dinner, a walk, something like that. And everybody around this podcast has all sponsored tables at galas, golf tournament, the holes, or the water section, or whatever the heck it is. We've all done that, and that's great. And I would encourage people to continue to do that. The problem is, if you think about it, most charities run paycheck to paycheck. They don't have a balance sheet. They don't have any endowment fund or reserves. Okay, so what I didn't like about the charity model, and I had a lot of pressure early on. They said, well, how come we're not doing gala dinners and we're not doing walks? Because I said, they suck from an ROI standpoint. I said, I can't put it any other way, but they're terrible ROIs. I was in Regina 3 weeks ago, meeting with some advisors. There was a snowstorm that day. Okay, it took 4 hours and 15 minutes to drive from Regina to Saskatoon. If we'd have been holding a gala that night, 50% of the people would not have shown up. So that $250,000 profit you thought you were going to make turns into a $100,000 loss. Okay, so you don't have a balance sheet. You're paycheck to paycheck or event to event. That's the state of the industry. Then this little thing in March 2020 hit called a pandemic, and all of a sudden you couldn't do events. We were all locked down. And so people went to virtual fundraising and the such. But what it did is it exposed the flaws in the system. And so today, and these stats come from some of the industry associations, there's about 20,000 on 85,000. So that's whatever, 22, 23% of the charities that are close to bankruptcy or on the verge of bankruptcy.
Oh, wow.
Which sucks because think about go back to the top 85,000 charities. There's about 190 billion with a B raised every year. Half of that ish goes to healthcare. Mm-hmm. So when you think about cuts in social services from the government, who picks that up? It's these charities that are picking it up, right? So all of a sudden, if you start to lose those delivery capacities in these charities, you're losing stuff that nobody else is going to pick up, and those people then fall through the cracks. So it's a real major problem. So unfortunately, we have a very unhealthy industry. The model has been around, can you donate $20, donate $100, buy a golf, go to a golf game, go to a bicycle ride, whatever it happens to be, which are all fantastic. Auctions. How many times do we give it hockey tickets? We've got tickets to the Habs. Give hockey tickets, and all great things. Like, continue to do it, but it's not a model that allows for scalability. You can't scale. Mm-hmm. And my vision was to create a $500 million endowment fund over the next 12 to 15 years. Because if you earn 7 on that gives you 35 million. 35 million a year of research I can fund because we're tax exempt as a charity. And my executive director figured out a way to leverage that 2 to 1. So now my 35 gives me 70 million, but I never touched the economic engine. So that's where, when I saw this from a business standpoint, I said we need to create an economic engine that's in perpetuity. And that's where this whole idea, we can get into about the life insurance donations and such. But so the industry, there are so many good people doing great work in the philanthropy industry. The challenge is they don't have enough business people around the table. And I will be
Right.
very frank, a lot of people that join boards do it because it looks good on a CV. And I would say to you, shame on you. If that's the reason you're joining a board, shame on you. Get off the board,
Right.
make room for somebody that wants to make a difference, because our skill
Yeah.
sets and our networks and our thinking will make a difference in that environment. So I'm
I
sorry.
think I think
I
there's
know
lots of
I'm
people
preachy,
that
but
no, it makes complete sense, and I think there's lots of people that have good intentions, but I think it takes creative thinking and thinking outside of the box to solve these challenges. And so you did that, and let's talk a bit about that next. So how did you come across the insurance concepts? Obviously, that's been around a while. People have donated
right.
life insurance payouts and things to charities for a long time. It's part of the Tax Act. It's part of how things are set up. But as a past tax advisor in my career, the biggest challenge was getting a charity to figure out how we're going to fund the premiums. Like, we can
Right.
donate it and we can get some credits for a client, but there's sort of two parts to that. One is, well, what's the value to the client that's making the donation, or the person that's making the donation? So I want to make sure we talk about that. But the trickier part is, how does the charity that actually needs those proceeds at some point in the future, how do they fund and keep that contract in force? And I think nobody's really, at least from my perspective through my career, I haven't seen a lot of creative things that have solved that problem until I met you. So I want to just chat about that. So just walk us through how you got into that space and
Right.
how you started to create a scalable opportunity.
Thank you. So the 40 years ago, color of the hair, but 40 years ago, I looked at viaticals.
Mm-hmm.
I was 20 years old. I was intrigued because the AIDS crisis had hit very hard. And there was this concept, and I said, that's a really interesting idea, but it was poorly executed. There was a lot of people taken advantage of. So park that now. Fast forward 30 years, and about 10 years ago, I was looking for my own investment portfolio at this thing called life settlements, which for people is the purchase and sale of a policy and the trade in a policy, where you buy somebody's policy, you pay them money for it. And in the United States, 30 years ago, that was not legal. Today, it is legal across the US. And as a matter of fact, it's swung the other way. In the US now, if a carrier does not tell you, in 45 out of 50 states, this is a legal issue. If you call a carrier and say, Tim, I want to cancel my policy, okay? If they don't tell you on the phone that there is a life settlement option available, that there is a market, you can sue them, okay?
Wow. Yeah. Makes
So the
sense.
pendulum has swung complete, and it is, because it is an asset. People don't realize that life
Right.
insurance is an asset. So 10 years ago, I looked at this and I said, oh, it's interesting. And then I know this sounds funny, but I was swimming. I do laps. I'm swimming in the pool, at the community pool, about 6 years ago, and I said, "Dum dum, you're looking for a way to scale. They have this thing called planned giving. Why don't we look into planned giving?" So I started to look into planned giving, which is very often involves donating life insurance policies. And the typical model is, Tim, you're 40 years old now. You're successful in your practice. The university that you went to calls you up and says, "Hey, Tim, we'd like you to donate $1 million." You say, like, "I don't have $1 million." But they say, "Yeah, but we've got this other guy, Jeff here, who's a life insurance agent. He'll sell you a policy, and you'll pay the premiums on that policy." Okay, which is a great model. So $1 million, you're 40, life expectancy is 85, 84. Okay, so we got to run 40 years before that charity sees a payout. Your
Right.
kids are 10 years old at that time. Okay, you pay the premiums every year, and you get a tax receipt for that premium, which is great. And you can apply it against any income, good for 6 years, all the usual stuff that everybody around this podcast knows because they do tax and stuff. The problem is, your kids now are turning 17, 16, 17, 18. They're going to university, and your spouse comes over to you and says, "Honey bunny, you know that money that we're sending to the university, which we love, we need that money to pay for school." Okay. So you call up the person at your advisor at the school who you have a relationship with, the alumni, and you say, "Listen, Jimmy, I love you. You know I love you, but for the next 4 years, those premiums I can't pay. I need that money to pay for my kids to go to university." So now Jimmy says, "Well, what do I do?" And in most cases, they don't have a balance sheet and they don't have anybody to pay it, find a replacement donor. Sometimes they do, but in most cases they don't. So what they do is they lapse the policy. So you pay premiums for 10 years. The carrier is not unhappy. I'll be very honest. The carrier, the carrier model, they get to keep it. So that 10 years of premiums is fantastic and there's no payout. And the reserve that they have on their balance sheet for you comes off. So it frees up capital, right? So that's the typical plan giving of life insurance model. And I looked at it and I said, that's kind of, I don't like the odds. So I'm a business guy, ROI. I said, I don't like the odds. I said, how do we level the playing field? And I remember 10 years before I'd been looking at life settlements and I started to think about that. And I said, is there a way to apply the approach of selective risk management to plan giving and kind of just level the playing field? I don't want an advantage. I just want to be level with the carriers. And so I spent 2 years traveling to all the life settlement conferences in the US and Europe. Life settlements, by the way, are only legal in 2 provinces, Quebec and Saskatchewan. And the carriers will do everything in their power to dissuade you, including telling you as a MGA, which is a wholesaler, or as an advisor that you may lose your license. They may turf your license if you are involved in any life settlements, even though it's legal regulatorily speaking. So I said, okay, how do we do that? And so I started to build a model, and I said, is there a way to do our own medical underwriting, find people that are lapsing policies? So our focus was not on new policies, but policies that are lapsing. Okay, so that means a policy that's going to fall off because a person can't afford or doesn't need it anymore.
Yeah, they're going to cancel it. Their risks may be gone, and they don't think they need it anymore, and they're just going to let it go. And yeah.
Perfect example is Keyman. So you got 2 partners, or you take a loan with the BDC or RBC, and they say, well, we need to have Keyman insurance, and we're the beneficiary. The bank is the beneficiary. Or you have 2 partners, and you have a shareholders agreement, and you need to finance in the event that one dies, that type of thing.
Yeah.
So
you sell the
very
business
common,
and you don't need it, or lots of examples.
Well, that's it.
Yeah.
Tons. We see that all the time. So now you've got these policies that have been paid for 10, 20 years. They're canceling the policy. So the carrier is very happy. Remember that they are happy that somebody pays and then cancels because they don't have to pay out, right? So that's their model. So I come along and I say, what happens if I find these people? I do the same thing they do. So they focus on mortality, which is the long end. What happens if I focus on longevity, which is the short end? And I start to do my own medical underwriting. And so I studied how it was done, and we built our own model, and we hired medical underwriters. And so essentially to be able to determine if somebody has a shorter life expectancy than a longer life expectancy. And think about it, even a term policy, which the industry has done a great job, myself included. I got tons of term insurance, Keyman, all of that. And I always thought about it as garbage. I said, well, when I don't need it, I'm going to dump it because there's no cash surrender value, right? We've always thought about it from that standpoint. But it's really a net present value calculation if you think about it, right? Mm-hmm. If I have an idea as to what the timing is, I can then discount back to today what the value of that future payout is. That's just a net present value. We do that all the time for every business case that we do. Yeah. So I said, if I could do that, then I can determine what's the value of that. And then I started to dig, and I realized that CRA has been, essentially has allowed this for 40 years, donation of life insurance policies. And there's 2 very interesting arbitrage opportunities. One that every single advisor knows about, and pretty much most of the industry knows about. And then the second, which probably 20% know about. And so the 100% is you have a term policy. If the person is within a certain window of age, you can convert that term policy to a permanent policy without medical underwriting, right? So you could have had a term policy 10 years ago where the person is a standard, which means they're healthy. And today they're uninsurable because they developed all sorts of diseases. They can still convert that policy from a term to a perm at standard, right? So that and the industry does that all the time. So that's common. And the carriers, it's a selling process. It's a selling feature for them, right? Right. The second one, which I found really interesting, that when I started to dig into the Tax Act and talk to the tax people, was you can donate a term policy and get a tax receipt for the fair market value of a permanent policy. So I'll repeat that. You can donate a term policy and get a tax receipt for the fair market value of a permanent policy. Not the cost of insurance, but the fair market value. Okay?
Which makes sense. The challenge is for the charity getting a term policy that's going to lapse at 80 or 10 years, the cost keeps going up exponentially till it ends. That doesn't work for the charity because they want to get a payout in the end. So it needs to be permanent. And so the conversion of a term to a permanent policy is required to actually make this work. But what you're saying is that conversion, it'll get converted when it goes to the charity, but from the person donating the policy, they can actually get a credit based off it being a permanent policy rather than term, because the argument on term is there's very little value.
Correct. So we did one recently in Brooks, Alberta. Okay.
Yeah.
Keyman policy standard. He sold his business for a good chunk. He's now uninsurable. Okay. The 5 million face, letting it lapse because he didn't need the policy. He's, his liabilities are covered, etc. from an estate planning standpoint. We did the donation, went through all the medical underwriting, and I can explain that after if you'd like, but we went through the whole process. The tax receipt was 2.4 million on a term policy. Okay.
And that's because of the permanent, how you're valuing it and using that within the tax law on a permanent basis. Because if it was just term and it stayed term and it just went, the value would be what, nominal?
It would be a cost of insurance, basically, right? So it'd be, call it zero for all intents and purposes.
Yeah.
So yeah, because we convert.
Yeah.
Oh, sorry. Go ahead.
Yeah. So go through how you go through that underwriting, like you mentioned, how you get it to be treated as a permanent contract.
Yep. So first thing we do is there's a 310 rule. So for the accountants out there, you'll like I get into this a little bit, but 310 says 3 years, 10 years. That's a CRA rule. And what it says is that if a policy was taken out without the intent, not the intent of donating. So it was estate planning, keyman, liability, whatever it was for, but it was not on the application saying this is for a donation purposes. After 3 years and 1 day, you can donate the policy, which means a change of ownership. It's an asset that you're now donating, and will allow the actuaries to calculate the value of the tax receipt as though it had been converted, because the charity will convert it into a permanent policy. And you do it at the fair market value. So the 310 rule is the key. Anything we look at has to be 3 years and a day in force. And the original reason was not for donation. If it was, you have to wait 10 years and a day. That's the 3-year, 10-year rule.
310. Okay.
310. Okay. So, and then that gets around the 2-year suicide clause and all the other stuff. So the 310 is really the trigger for us. So two things. Is it, 3 years and a day was not originally intended for donation purposes. So keyman, estate planning, liabilities, whatever is all perfect. And the second thing we ask, is it convertible? So 70% of our donations are term, 30% are perm, which is ironic because you say, why would somebody donate a perm? Because there are tax advantages rather than, and I can get into it, but there's tax advantages rather than collapsing a permanent policy like a UL or a whole life, that you actually donate the whole thing with the cash, and you end up far further ahead than you would if you were to take the cash out. But coming back to the term perm conversion, we don't want tail risk, Tim. So I don't want somebody to live beyond the term of that policy, which is why we switched to a permanent policy.
Right.
So
then your example of your client, or the Brooks situation you mentioned. So a $5 million contract that would be canceled. And in that example, you said, I think $2.4 million of a donation credit. Or is that what they came back and said that's the value of the contract? So that individual then, in making that donation, gets donation credit for the 2.4 million, which I'm assuming then about half of that is what they're getting back in tax.
So he got about 1.2 back.
Yeah.
On a piece of paper that was going to the garbage.
Yeah. So they were going to get nothing.
You got it.
So that's pretty compelling. The challenge on that, and that's not that new other than the arbitrage, the second part of that arbitrage you mentioned, but now you got to fund it.
Yep.
So your foundation, we go back to your foundation accepts the policy. You go through the medical piece, and that's fantastic, because in the future, you're going to have $5 million show up in the foundation that you're going to be able to use for research and all these great things that you're doing. But you're still left with the fundamental challenge of how do we keep paying those premiums to keep that permanent contract in force?
Right.
So talk a little bit about how you solve that issue, because I think that has been the biggest challenge likely in this whole thing for charities.
Yeah. So I went on the street. So basically went to see hedge funds, pension funds, banks, Schedule A banks, Schedule E banks. I did 125 presentations to financial institutions. I said, here's my model. I've had it vetted. It works from an actuarial standpoint. Like everything works, but I need financing. And they all said, no problem. If you have CSV, we'll finance you. So CSV is cash surrender value. Is there cash buildup in the policy? And I said, guys, I just explained to you my model is to be as thin as possible from a cash flow standpoint. So if I have a term policy, I'm converting it into a permanent policy. There's not going to be any CSV. There's not going to be any cash surrender value because there's no advantage from a taxation standpoint because I'm already tax exempt. So, I kept hitting doors. My nose kept getting flatter and flatter, basically, because everybody said, no, 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 no. And then I took a step back and I said, okay, we have to be a little more creative. And so we built a financing mechanism. So we have three sources of financing today. I have donors that finance premiums. I have internal cash flow. And then I built a mechanism to finance the premiums. And essentially what it is it's predicated on the death benefit, not on CSV. And so we were able to build a model with actuarial and everything else behind it to be able to show that, the only way you can do this is if you have good medical underwriting, good APS, good actuarial. I just want to put a little parentheses. The insurance industry has done a great job of making insurance opaque. Nobody understands what insurance is. Okay, myself included. I did not understand insurance, and I have lots of it. Somebody says to you, you got to buy it. People, there's an expression, insurance is sold, it's not bought, right? When you think about it, which is very true. Mm-hmm. So as a business owner, I take out a term policy to cover that liability or whatever the issue is. So this comes back to your comment earlier. Charities are afraid of life insurance because they don't understand it. And they don't have the infrastructure to be able to understand it. Remember what's driving me. I have two boys with a disease that I want to see them grow up and be old. Okay. That's my objective. So every night when I go to bed and every morning when I get up, my brain is working. And it's how do you find the solution to that? So at the end of the day, we came up with a mechanism where we figured out how to finance death benefit. And it's a little bit of a proprietary sauce, so to speak, but it works. We've now done, we started Feb 1/19. Then this little pandemic hit a year later. We've done 60 million of donations in the past 4 years. We have a portfolio, probably one of the larger portfolios in the country from a life insurance standpoint. We have 90 policies in our portfolio, so for 80 odd lives. I now have donors giving us repeats every year. They have multiple policies and they're donating every year. I actually have 4 advisors, and I got to tell you, the people in Alberta have been it's fantastic. I love going out west because the attitude is, what can we do? How do we make it happen? Nobody's got their hand out asking for a handout. And I have 4 advisors in Alberta that have donated their own policies. Okay. And they said, this is fantastic. And when I was in Regina, one of them actually set up a whole breakfast for me to meet with all of his COI, his centers of influence and the such, and then also other insurance guys that are kind of his peers in the industry. So we have a portfolio and the challenge you have, I'll be very frank with you, is when you look at it from an actuarial standpoint, you need to get above 120 lives to reduce stochastic volatility. And stochastic volatility is just, this up and down of when you're going to get a payout.
Right.
So I'm still in that what I call steamroller alley area where I'm big, but not big enough to reduce my stochastic volatility. We will be later this year as we add more policies. Right. So we've now seen about $420 million of face in the past 4 years. We're averaging about a policy every day and a half that gets submitted or a case every day and policy every day and a half. We have phenomenal support from our colleagues out west. Alberta has been by miles the best supporters of this concept. The philanthropic attitude has been fantastic.
Happy to hear that.
Thank you. I'm just hats off to everybody out west. It's just been fantastic. I remember my model. I want to build a $500 million endowment fund. That's where where we want to drive to.
Your passion to get look after your family and to make a difference and change not
Thank
just
you.
the lives of your boys, but other people that are going through this. And I think it's even beyond this disease. You're creating change in the medical system and through these multidisciplinary clinics that are affecting a whole bunch of different things. So congratulations on
Thank you.
on that. That's just inspiring. I want to, and we're just wrapping up on time here.
Yep.
I want to just sort of say, you've talked a lot about the industry professionals. I'm glad to hear that you're getting people in the insurance community stepping up and looking at this. I would highly encourage the accountants that are listening today and other professionals to do the same and understand this opportunity better. I guess I just ask you a final question here and we'll wrap up is what challenge would you like to leave with our listeners today?
Thank you. So, again, many people don't have expertise in healthcare, don't have expertise in medical, don't have expertise in charity. I would say get involved. Take your expertise and bring it to the table, and not just to be on the CV that it looks good. Roll up your sleeves, get dirty, help out. Because when you sit, I'm telling you, we deal with, if you look at the medical, and in Canada, we have such brilliant healthcare medical professionals. They are dedicated. They will bleed for their patients, and the system crushes them. Okay. So we can work and help them facilitate, be catalysts for them. And I would say that every single one of them, whether you're an accountant, whether you're a tax person, whether you're a lawyer, whether you're specialized in some other operations area, whether you're an IT, it doesn't matter what area you're in, they need your help and they need your expertise. And these medical professionals, their hearts and their whole lives are, I have, just to give you a quick example, Tim, I have doctors that I know, surgeons, that pay for medical assistance out of their own salary.
Yeah, wow.
Okay, like that's the level of dedication we're talking about. And we
Yeah.
finance medical research in cardiology, ophthalmology, orthopedics, spine, women's health, osteoporosis, GI, allergy, and AI. Okay, so we deal with guys, when I say guys, people across the whole spectrum. These
Mm-hmm.
people need our help.
Yeah. No, that's great. That's a great challenge and good wisdom, and I encourage everybody to step up and do that. If our listeners want to get in touch with you, they want to learn more about Loeys-Dietz and your foundation, how they can support it, or they just want to learn more about what you're doing on the insurance side and how you're creating better funding for not just your foundation, but arguably for charities around Canada. What's the best way for them to do that, Joe?
My cell phone is public. It's on our website, so Loeys-Dietz, Canada.org. Call me anytime. I'm not sure. You'll probably have details in the description of the podcast. You can put all my contact information there. I'm available. The opportunity for us to leverage here together. If I just look at your network and what you've built as an integrated business and your whole approach to wealth management and value creation for your clients, we can leverage a whole piece onto that.
Mm-hmm.
Every single person that's a part of your network and all of the centers of influence, all of them, we can working together can leverage that and take it up to another level. And I will work with anybody, anywhere, on any charity, anytime. Even if you have another charity and you say, I want to know how to do this, call me. I will share with you what we do and how we do it. Okay, because it's going to help somebody else. It's going to be
I
good for
love that.
somebody else.
Yeah,
So
I love that, and I look forward to the opportunities, Joe, to spend some more time with you and collaborate on making difference for these important causes. And so I just want to thank you so much for taking the time out of your busy day. And and your boys, I'm sure our listeners are, your boys are doing. How are they doing?
thank you for
I want to
asking.
just that.
It's been a tough journey. My oldest one has had spinal fusion, cancer, double eye surgery, and such a resilient person. He had sudden cardiac arrest 16 weeks ago. He's lucky. He's only 10% of people survive that. And 8 weeks ago, he gave the keynote address to 50 spinal surgeons. So I was very proud of him. So Not an easy journey, I will tell you. It's very tough, but he's resilient and doing well. My second one, a lot of other issues, but again, resilient and doing well. They don't complain, and we just, we live day by day, and we're grateful for every moment, and we're grateful for all the wonderful people, medical professionals and other, that support us and support our families. And I'm really grateful for the opportunity to be with you here today, because if one person hears this and takes action, we've done something really good. And I'll just give you a quick story. So I'm wearing a jacket that says Loeys-Dietz. You can see it here. I have, so we have people that wear these. It's marketing, of course. I have advisors that are now calling me and saying, I have a patient who's been diagnosed with Loeys-Dietz. Can you help them? Okay. I've had people walk up to people that wear these in grocery stores and say, my kid or my grandson or whatever was just diagnosed. So, if there's any patients out there, we'll help. If there's other charities that want to learn how to do stuff and think out of the box, we'll help. And together, I would say we could, do a great thing together by taking what you've built, which is phenomenal and successful. And I congratulate you with what we're trying to build, and do it together with your whole network. I'll go anywhere, anytime with anybody.
Yeah, love it. Love it. Absolutely. We're going to talk more about that. And I'll just close by saying our prayers go out to you and your family, Joe. Great. Just inspiring to see your passion for your family and the causes and the change that you're bringing to Canada. So thank you for that. I would encourage the listeners to learn more about this, learn more about their foundation, support them as you can. I know us at WealthCo and the group, we're going to be doing that and working hard to support you, Joe, and what you're doing.
Thank you.
And on that note, I'll wrap up this edition of the Innovative Accountant Podcast. Thanks again, Joe, and I hope our listeners enjoyed our podcast today. Take care.
Thank you. Thank you very much, Tim.
Thank you for listening to this episode of the Innovative Accountant Podcast. We hope you enjoyed the show and even learned something new. If you're interested in elevating your firm and transforming your client experience to create sustainable firm growth, get in touch with us by visiting integratedadvisory.ca to set up your free call with one of our integrated advisory experts. Visit integratedadvisory.ca today to set up your free call with an integrated advisory expert. Be sure to subscribe to the Innovative Accountant Podcast so you never miss an episode. Thanks for listening, and be sure to tune in for the next episode of the Innovative Accountant Podcast. Production of the podcast is by At Heart Creative and can be found online at heartcreative.com.